All right, good morning, everybody. This is Mike Pisani with AlphaShark.com and SmartOptionTrading.com. It is Saturday, the 27th of October, and this morning I want to do a special webinar with you guys on trading volatile markets, because guess what? We have a volatile market here, right? And I'm saying volatile because I want to be careful about saying what word, guys. What's the one word that nobody wants to hear here right now? Are we in a what market? You got it, right, Chris? Bear. Crash. No, bear market. Bear market, right? I do want to be careful about using that term here because we're really not there yet. That said, we're not feeling too hot here, are we? So let's talk about what we can look at here. Yep, under the 200 days, we've gone into correction on all the indexes. So let's jump in. All right, risk disclaimer. Day trading, short-term trading, options trading, and futures trading are extremely risky undertakings. They generally are not appropriate for someone with limited capital, little or no trading experience, and/or a low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risk, and you can lose your entire investment. No trades are recommendations or advice, and we cannot be sued for losses of capital. All trades are for educational purpose only. Contact your broker or RIA for execution margin or other capital requirements. Everyone watching this presentation adheres to all disclaimers from AlphaShark.com and myself, Mike Pisani. Okay, so today we're going to talk about trading volatile markets, and I have a presentation there about that I want to go over with you. We'll jump back and forth between stuff. I want to go over market sentiment with you guys like I always do. I do have one institutional piece of flow I want to point out to you. And then we'll go into charts until the end, okay? I hope that sounds good to you guys. For people showing up here a little late, welcome, welcome. We haven't missed anything yet. We're just about to get going. All right, so trading volatile markets. So first up, you need to be able to recognize market change. We've talked about this with you guys a couple of times. And for people who are in my service, been saying since early August the markets weren't acting right. And did you recognize the change that started to happen back in early August? It's the first question to ask yourself, right? And the real change there was we had a handful of names running up, but the SPY held in, but under the covers, we started seeing a lot of selling, right? And you guys know the names that they were playing, right? From most of August and into September, they're playing the same dozen or so names. We all know what they were, be it AMD, Square, Amazon, pick the name, right? There were a couple names that they kept pouring into while the rest of the market really didn't move, right? And that's kind of a warning sign, guys. When you see that, that's a sign that you need to take notice that the market's not acting well. It's not acting correct. And while that was going on and the index held up, right? And that's a shot of the SPY during that period, right? That there circled it for you. What did we start to see under the covers, right? And if you guys think about it, a lot of names were already getting into bear market. Google was there. Square had that 30% correction, right, real quick. Netflix is well 20% below its highs under the 200-day. Facebook's been down there since last quarter. The banks can't find a friend, right, in this market. Every time they bounce one day, they sell them off again worse than they were. Micron went into a bear market territory. Right, and among a whole bunch of other names. So really, if you start looking at charts under the covers, a lot of names were breaking down while the indexes were holding up. All right? Did you guys catch this? Were you guys paying attention during this? Then you don't have to answer. I mean, just this is things you need to watch for when this starts happening. Then the VIX started to break its downtrend. Right, we started to see a change in character in the VIX, and finally the SPY gave up the 8 and the 21 day. And at that point, you should have been making changes or adjustments. All right, anything at that point, that was your last message to say, hey, something's going on here. You guys with me so far? This making sense to you guys? Okay, good. So now we have the return of volatility, right? Yep. And you're right, David. The Russell led us up, and the Russell led us down, right? We're going to talk about that a little bit later on. But the Russell was showing weakness long before everything else broke down. Another warning sign. So now we have the return of volatility to the markets, and that's a shot of the VIX. And you can see it if you're looking at that. If you were looking to play something long, isn't that a beautiful looking chart, right? Isn't that something you want to be involved in? breaks the downtrend, shoots up, comes back in, does about a 50% retracement, held 17, which is an important number, and now has popped back up towards 27. If you were long, wanted to be long a stock, wouldn't you say that's a pretty chart? So what happens when we get volatility in the market, guys? So some of the things that start happening is, first off, you get larger moves, bigger range candles on the indexes and individual names, right? Volatility means wider moves, right? The markets, instead of moving a couple bucks a day on the SPY, has been moving 5 or 6, right? We get these bigger, wider range candles, sometimes even more, right? So you have a lot more movement, okay? Keep that in mind. When you have more movement, do you need as much size on to take advantage of it? Do you need to put as much risk on? Okay. Options become more, no, your guy's right. No, you don't, right? You don't. All right. Options become more expensive. Why do options become more expensive? Well, because options are tied to the VIX and they have implied volatility, right? Exactly. They have IV. So if IV goes up, option prices go up, which means we always need to be careful when we're playing to the long and we're getting a squeeze day, because what happens to the IV when the market starts to bounce? What's the first thing that happens? IV comes draining out of the options. Spreads get wider, IV drains out, you get IV crush on the market. So you have to be careful on names that don't move very much about going in and going way out of the money. Now, if it's something like Amazon or Netflix or Tesla, right, different story. But if you're playing something like Apple and you're at a 20-cent delta and you get IV crush, guess what? Your options are probably not going to work for you on that one. Does that make sense? It's going to be tough, right? There'll be decay. The IV will be coming down as fast as the stock is moving up. All right. So options get more expensive. They're harder to play with. Spreads are wider. Right. This is something a lot of people don't realize. Selling can be harder because liquidity, especially on the way down, can be a major, major issue. All right. Somebody brought this up. They're right. There are a lot fewer market makers today than there was 10 years ago. So when you get these flushes down, it's not easy to get out, right? Have you guys noticed that, how hard it is to get out, right? If you're trying to sell, and how they just won't take and they won't take, and you find yourself chasing these things down because they don't have, there's just not, the liquidity is not there at that point. So you need to be aware of this when you're trading a market like this. On the same tide, have you noticed, like on the open, the fills, it's harder and harder to get in because there's just not the liquidity there. It's just not as there when when you want to get in. Okay. So how do you trade now? So first, real important question to you guys here as we're talking about this. Are you comfortable being short markets? So how many of you guys are comfortable being short the markets? Honest answer. Right? Think about it. Answer that. The honest answer is most of us are not. I will be the first one to tell you that I struggle being short. I'm very upfront about it. I trade VXX to the long sides because I have a hard time staying short the markets. Bottom line. If it's not easy to be short because we're taught markets go up, right? And you tend to think that every bounce in the market is the start of the next move back up, right? So, that's the thing. When we're trained to buy the dips, right? Glue's saying here. Okay. So it's hard to be short. It's a very hard mindset. Very, very hard mindset. Yep. You could also reverse your charts. I could show you, or you can wait, right? If you're comfortable being short right now, fabulous. Puts are paying off big on the indexes and individual names, or playing volatility, right? We haven't been able to play volatility for the most part for the last 2.5 years. Calls on the VIX, VXX, or UVXY, or I trade common on VXX all the time. People in my service, they see me in and out of this thing every, 4 or 5 times this week, on VXX and UVXY. UVXY, by the way, please be a little bit more careful with. It is a leveraged ETF, right? You understand what that means? It's a day trading vehicle. It moves faster, and you want to be careful holding it overnight because it has decay built into it, kind of like an option. Now, just telling you. Danger. All right. If you're not comfortable shorting, I made most of my money on quick longs this week playing quick bounces, and we're going to go over that. In every market, there's bounces, right? Even on an intraday chart, when you see a market, how often does the market on a day go straight down, right? You get bounces. You get times where you can jump in, make some quick cash, put money in your pocket, and get out. But this is really your question. If you're not comfortable short, don't short. Stay out of the way. Wait. We're going to go over that, right? This making sense to you guys a little bit here? Because I've had a lot of conversations both with people in my service and people not in my service the last week or so. And a lot of this is kind of important to put into your head. You need to decide who you are and what works for you. There's no right or wrong answer. And that's really the important thing. Okay. If you're not comfortable short and you're a swing trader, I'm going to tell you this right now. Stop trading for now. You do not have to trade every day. You do not have to trade this market. I don't think a lot of other people out there are going to tell you this. Stop. Just push away and wait and watch. All right? If you keep trying to swing and you're getting your ass handed to you, and I'm going to use that word today, stop. Step back. Don't keep doing what you're doing, right? If it's not working, stop doing it. It's easy for me to say this, but it's hard for a lot of people to get this into them, right? So, and this is not trying to talk you out of anything, but if you're not comfortable being short and you're not a day trader or a scalp trader, this is not the market to be swinging long right now, right? Who thinks this market's good for long swings at the moment, at this moment right here, after Friday's action? No, not me either. Right? No, not there. And I'm gonna, Lou, I'm sorry to hear that. I understand. You can't try to catch bottoms. You can't call bottoms. You gotta watch for it on its own. So markets change and your tactics and style either have to adjust with it or wait until conditions become favorable again to your style. Very, very simple concept, hard to do. All right. For me, I can change my style. I've learned this the hard way. I've learned over time. Day trading right now, Danny, scalp trading specifically, we're going to go over, is working, right? There's things to do every day to make money in either direction depending on how you want to play and how you want to set it up. Okay? So change your tactics or stand aside. Right? Why? How do you trade now? Why? You need to keep your powder dry for squeeze days. Okay? Do you understand what I mean by a squeeze day? Even in bear markets, you're going to get short squeezes where they come in and they try to shake out the what do you call them? The weak hands, get the weak hands out of the market, right? And you get these short squeezes, short covering days, like we had a week and a half ago, right? Everybody remembers that morning we gapped up big and we just grinded all day long. That was a short squeeze. They weren't buying the market that day, guys. That was shorts covering. And what happens when a short covers? They have to buy back the stock, which causes it to go back up, or in this case, the index, the SPY, to go up, right? So that was a good short squeeze. So keep your powder dry, because if you're losing money, you're not going to have it for one of those days. And trust me, one of those days is going to come. And it's probably not that far off where we get some type of short squeeze, right? If you just keep taking trades and losing money, you're bleeding down. You're also doing what? You're doing mental damage to yourself. Your psychology, you're losing trades, you're feeling bad about yourself, you're feeling bad about the markets. Don't do it. Don't let it happen. Be patient. So simple mental cost is absolutely the worst. Thank you. I agree. Simple thought. If your goal is to make 400 a day and it's an arbitrary number, it doesn't matter if you make that every day or one day a week you make $2,000. What's the difference? Isn't it not better to wait until you see that time where you think you can go in, make your money that day, get in, get out, and then wait to see what happens again and put the money in your pocket? Rather than sitting here and getting chopped around and chopped up and chasing candles that turn out to be fake candles, right? So, I mean, here, let's switch over here. This is square yesterday. Let's pull this down for now. You know, whether you are a short or long, here's the SPY yesterday on a 5-minute chart, right, guys? So here you did. You had the open pushed, and then you got the sell off, right? Remember that sharp sell off this morning, yesterday, on consumer sentiment? So if you got long here, you got chopped up. If you decided this is it, this is the plunge, right? This is going to be it. We're finally going to get that break, and you shorted here, you got your ass kicked, right? Because look at this. Look at this big move back up. And then we just kind of came down all day and closed just kind of blah. My point is, this is tough to trade unless you're quick. Now, if you tried some longs in here, you could make some money. Just don't overstay your welcome. I say all the time to guys, cash is a position, cash is a position, cash is a position. Don't take the trades. Thank you. Stay in these, right? Don't, sometimes, right, Mark, the best trade is not to trade. Okay, so we'll go over options in a minute, Danny. Keep that thought there. So think before you chase. Keep your powder dry. Look for the conditions that work for you. The market's going to give them to you, probably when you're not paying attention, so stay with it. All right, how do you day trade? If you can't help yourself and you have to trade, or you do it for a living like me, you need to reduce size. With that, trade 1 or 2 options to keep your risk low. Danny's asking me, how do you keep so Danny's asking a great question. How do you keep from getting IV crush? So let's use Apple as an example. Let's pull up Apple yesterday. Where is Apple? Here, let's pull this down. All right. We're going to go back and forth today, guys. All right. So if you decided you wanted Apple yesterday, down in here for this move, right? So what happened here? We came down. You got a V bounce on Apple, right? You see this nice V bounce. And then we went sideways here at resistance for a while, and then we got the move. So if you wanted to play this break, right, and this break here was roughly $3, I would have played it with a at the money option, Danny. Now, yes, last week's are gone, and we have earnings this week, so IV's a little bit jacked up on these, okay, because of earnings this week. But I would have grabbed the at the money, probably either the 217.50s or the 215s, whichever I was closer to at that moment, and gone with the delta. That delta and that move would have offset IV crush. And does that make sense? You can even go a little further in. If you're trading a name that you don't think can move a couple bucks, let's use like AMD as an example, right? If you're going to trade AMD, I would go in the money then, like the 17s, get the delta, right? For $1 here, $1.25, right? Because AMD is not going to move quite as much, right? Make sense? Yep, that's right. The delta makes up for it. The delta is going to make up for it. You're trading it more like an option, like common stock at that point, Danny. Okay. Now, if you're trying to trade these out here, right, for a day trade and a scalp, these 1950s with a 0.23 delta, and IV starts crushing, you're going to be in big trouble. So that's something to keep an eye on there. Okay, back to the thing. I will post the recording of this on my public Twitter feed. You can get it at, I'll give it to you guys all. You guys can follow me on there. I'll post it a little on today. All right. So reduce size. Trade 1 or 2 options. Go in the money if you're day trading, or at the money, depending upon. Now, if it's Amazon or Netflix, which can move big, obviously you don't have to do at the money on something like that, all right, or Tesla. Trade common, guys. I've been trading a ton of common lately. You don't have to worry about IV crush. You don't have to worry about all the little games going on in the option market and spreads. Pick names that trade tight, and you know how they react. 100 shares, common shares of Tesla would have paid huge multiple days this week with easily well-defined risk. Even 20 shares would have worked with this thing moving 20 to 30 bucks a day. Put it in, put a stop in place where you only can lose a little bit of money and see how it works, right? You had some big moves on that. Same thing with Square. Most important thing here is don't overstay your welcome. Put money in your pocket. Don't assume unless you really hear everybody talking like this is it, that this is the end of this corrective action. Assume that this is a chance to make money and put money in your pocket. And if you want to leave a runner, try a runner, but put a stop in the money so you can't lose on that either. Are you guys following me here? Right? This market is about getting in, getting out like a surgeon and putting money in your pocket. And please, guys, tell me if I'm sounding too preachy, because I'm really not trying to. I'm really just trying to help you guys out today and give you guys how I've been trading and how I recommend ways to look at this market at this point if you want to trade and make money. Also, most important thing, do not be upset about leaving money on the table. Better to put money in your pocket than to give it all back, right? Okay? Don't be upset about it. You know what? I made $240 in about 3 minutes on Tesla the other day on 100 shares, put it in my pocket. I could have made $2,000 if I held it. And I did not look back and say, I'm such an idiot. I'm a dumbass. I had a 3-minute trade. It hit my first resistance level and I ejected out. And you know what? Had I been patient and left it in, it would have worked. But guess what? They would have come in and stopped me out first for a loss. So I just chose not to get back into it. Yep, Fonzie makes a great point. Thank you, buddy. You could use monthly options also to trade to reduce the IV crush. They're more liquid. A good point. Of course, Mark, Delta always works no matter what type of market. Delta is basically how much the option moves per dollar the stock moves. I don't know if you can day trade on less than that size, Danny. You'd have to check with your broker. Yeah, so Delta works. Okay. So let me make sure I didn't trade. Okay. So how do you trade now? You look for the strong names, right? Especially post-earnings names. Twitter, McDonald's, Tesla. What are some other names that have been strong out there lately, guys? How about this chart of Apple? Still in the box, hasn't moved yet, hasn't sold off yet. Yeah. PayPal's been strong. Come on, here you go. Microsoft was strong, another good one. Walmart's been strong, great. Cat, not so much. But Boeing's been holding in well, right? Boeing's been holding in well since earnings. Costco was showing some strides, right? My point is, look for the stronger names. These are the ones you want, right? So, let's walk you through here a little bit of my day yesterday and how frustrating was it, but how I stayed in the game and found a way to make money yesterday despite having a horrible open. Okay, so on the open, I want to square at this line around 69.60, and you're like, Mike, why do you want that there? Well, look what I drew here. I put it in right there. What do you see here when you look at this chart the last couple days on Square? It held here pretty much every time, right? You notice that on a 5-minute chart, on a 3-day chart on this? Support there. What's it have coming up this week? It has earnings this week. So my thesis was they're not likely to let it go much further before earnings. Yeah, I knew what you meant, Mark. I do that all the time. Don't worry about it. Resistance support. If I mix it up and I'm talking, please correct me. Um, right? So my thought was, I got mad as hell on the open. I was trying to buy it here. They didn't fill me. I chased twice, and next thing you know, I pulled my order because it had moved from 66, where I had my initial buy-in, and it was all the way up around 69, up almost $1 on 1,000 shares. That would have been $1,000 in my pocket, and I stopped chasing it there. And I didn't chase it up the rest of the way. And then look at that. But you had to be quick, right? If you got in here, you should be taking money through here. If you have 100 shares, taking money through here. If you have one in the money option or two, put a stop and walk your stop up here. Don't let it go. If you chased into these candles and you said, this is it, we're going to run, look what happened. I would have taken a loss, right? I would have been up. If I had chased, I would have been up here, not down here. And even if I was here, they would have taken me out for a loss. And I did not buy it here because I did not like the way the market was acting. And that was on me. I was out of sync at that point. I was frustrated, right? And I'm telling you this so you understand what my day was like. I then also tried to buy Twitter simultaneously, 1,000 shares, and on this first candle, and they didn't take my order. Was upset. Could have bought it any time off this line I had here. You notice this? What do you guys see here? Strong support. Yep, same thing on Square. I wasn't paying attention to that more, but I was out. I missed that. So those two trades had me upset going through the day because, and I didn't chase and I didn't come back after them. So I spent most of the rest of the day sitting here until late. And then late in the day, I'm paying attention, I'm watching the markets, and the first thing I see is this. Before I even see the news, Tesla, which had been incredibly strong all day, I see this volume flowing into it in this big red candle. So I jumped on some puts and made some quick money on some puts and got out down in here in one of these candles, right? They wouldn't take it. I kept putting it in at the bid over and over again. They wouldn't take it, Kerry. When you're getting fast moves right now, liquidity is a problem sometimes. That's what I'm trying to tell you guys. Liquidity is an issue when you have a volatile markets. It's harder sometimes to get fills. For whatever reason, they refuse to fill me. Kept putting in multiple times. They wouldn't take it. All right, so I caught Tesla, and then what I did is I was watching the VXX guys. And what I did here is I was watching it into here, and I grabbed it into here, and I grabbed it here for a nice little pop through here, made some nice money on some shares of it because I was watching the SPY. And this is what sometimes will keep you guys in the game, right? What was the SPY doing all yesterday afternoon? I pointed this out to people in my service. Tell me if you guys see it. Danny, it was making a series of lower highs on the 5-minute high on the 5-minute chart. Lower high, you got it. Yep. So that when I saw this one here, I'm like, when it failed here again the third time, that's when I tried the VXX. Make sense? Saying if this goes above it, I'm in trouble. But it was a calculated entrance at that point. Does that make sense? For a quick trade down, and I found a way to put money into my pocket. And this is what I'm trying to tell you guys. If you're looking to day trade and scalp trade, this is what you need to be looking for, right? You don't want to be chasing down moves. You don't want to be chasing these big up moves. You want to be making calculated moves or sit on the sidelines. So I'm just trying to help you out here, telling you what I was looking at, what I saw, what got me to make those trades I did yesterday. And yeah, I was upset. I was very upset that I didn't catch those first two trades in the morning. They would have been big winners. All right. So look for the strong names, right? Chris, I just went over this with people in my service. I'll do that a webinar on that in the future. I found VWAP, when it combines with some other indicators I use, some other areas of resistance or support, become very strong. Not on its own necessarily, but become something that when I find multiple come together, it really, really that. Yeah, Kerry, I watched the SPY to trade the VIX. You got it. Again, look at the chart here. Let's shade this out. Here, let's put the VIX here, the VXX here, right? And here's the SPY down here, right? And when it failed those higher lows here, I looked and said, I'm going to try. I didn't want to buy. I wanted to go long the VXX. So I went long the VXX. That was, that was here. It was into here, right around 14. I got in 4014, 4014 if I remember right. All right. I tried it there, right into this failed here. I tend to trade a lot of weekly options when I'm just scalp trading or day trading. But Fonzie brought up a great point. He's a pretty good guy out there. He has his own stuff he does, but you can trade a month out and avoid a little bit more IV crush, right? So you maybe go, it'll balance out. Depends what you want your risk profile to be. But you can go a month out. Sometimes they're a lot more liquid. Monthly options tend to be a little bit more liquid than that. And I don't worry too much about theta decay when I'm scalp trading with options, Danny, because I don't plan on being in that trade for long, or if I'm going to be in it longer, then the move is very much offsetting that. Does that make sense? But typically, if I'm in a weekly option, I'm in and out. I'm not sitting in that thing. I'm not taking the chance that that thing pulls and I never get my money back on it. I'm making my money. I'm getting in, getting out. Unless I'm taking a lotto position where I'm willing to let it work. How long was I long VXX before I closed for a profit? My orders are gone here from TOS. They reset it. Can I see it here? Hang tight for a second. Let me see if there's a way. It wasn't long. Yeah, they wiped it all out. I want to say I got in at 14. I think I actually sold into the top of this candle. I think I got into this candle here. I got in on this candle here at 14, and I sold up at 40 something into the top of this candle. I did not get the whole move. I'm not going to lie to you about it. So I got it. I was only in it for probably about 5 or 6 minutes, maybe a little bit more. Yeah, it's not showing for some reason. I'm on it right now. I'm not going to spend time looking for it, but yeah, I had 1,000 shares. I had 1,000 shares. I made what from 14 to 40 something. What did I do? Here, I'll go pull it up for you guys exactly. I was in at 40.15 and out at 40.46. So I made $300 in about 5 minutes, and I called it and got out. Did that answer your question? Yep. I'm not letting profits. My mentality in this market, guys, is I'm not letting profits get away from me. I'd rather put money in my pocket and have money in my pocket is better than watching it go red and then sitting there beating myself saying you're an idiot, right? Who's done that? I've done it. Or getting stopped out flat when you had $300 in your pocket, right? I'd rather get stopped out with the idea if I want to, I can get back into it. All right. So how do you trade now, guys? Well, a little bit more. Stay vigilant. I cannot encourage you enough to stay vigilant. Markets generally bottom when everyone gives up, right? We know that. When sentiment is typically at its worst and every bear is out on CNBC or Bloomberg or Fox Business screaming that we're going down another 20% from here, you know that's usually when we're getting closer to an end. Okay? Listen to people you trust. I don't care who it is. If it's me, if it's somebody else out there, listen to people who aren't trying to tell you what to do. Listen to people who are just trying to set up and give you the right opinion about what the markets are doing and what sounds left, and use them as a sounding board. Use them as either they're confirming how you feel or maybe they're not saying how you feel and you should take it back and reevaluate things. Okay? So find people out there, whoever those are, find them. Recognize that right now, every bounce in this market is sold, right? To this point, every bounce in this market is being sold off. Okay? We're still waiting for a change in character, right? Your Gartner's a good signal, right? Yep. Exhaustion phase. We haven't seen that. We need a change in character. A change in character usually comes from an exhaustion phase, right? We've talked about it. A spike down, a panic. Have we seen panic yet in this market? Anybody think we've seen a panic move yet? Nope, I don't think so. No panic move yet. All right? Hard to find a bottom when you haven't had a panic move yet on something like that. Nope, buy the dip is not working. You're right. Watch for big call buying. People like me, I have a service, but I will post, I post stuff on Twitter for free, right? If I started seeing a change in character, I'd be saying something about it out there. All right. And the last one, don't have FOMO. Okay. You guys know what FOMO is. Fear of missing out. Everybody expects this to be another V bottom. Does this feel like any other type of pullback or action we've had over the last 3, 4, 5, 6 years in this market? So while it certainly can happen, why would everybody expect a V bottom and you're going to miss out? You don't, I posted this the other day, you don't have to be the first one out of the bunker. What happens to the first person out of the bunker, guys, most of the time? You watch, how many of you guys watch more movies? Right? What happens to the first person that sticks their heads up and gets out of the bunker, right? They get shot. They're dead. You don't have to be that. Let the big boys do it. Right? So, you don't have to be the first one. All right. A couple other little things. If we're entering a bear market, I'm using the word if here. I want to make it a big if, right? Because it's hard to say what we're doing here. If we are doing it, though, this is going to be a longer, protracted event. Does that make sense? Bear markets typically last a while, right? Most bear markets used to be slow rollovers, right? Not fast ones. So here's where I want to say, Stan is saying, John Nigerian said the market's overpaying right now for protection. Maybe it is. I've seen Jim Cramer call bottom 2 or 3 times this week. I've seen other guys calling bottoms. Bottom will be in when the market's ready to have it in. I don't try to call bottoms or tops. I look for indications that the market is changing. Okay? So what I can tell you is they were buying puts again heavy into the close yesterday. We've seen the same type of action overall over and over again this week. Big put buying on the indexes into the close. So there will be plenty of, but even if it's a protracted downtrend, if we're going into a bear market, there's going to be plenty of long opportunities. Strong names will outperform, right? Like McDonald's, like Procter and Gamble, like Tesla, like Twitter, right? They're going to outperform. Markets don't go straight up or straight down. There will be bounces, multi-day bounces, short squeezes in the middle of this, right? Stair steps. We're not just going to fall off a cliff. What you need to do now is create a list for a go-to list to go long or short plays for swings when this is over, right? You should have a list in front of you of names you want to go to. If you think we're going to get a bounce in a multi-day swing, or if you think we're going to get a nice squeeze, these are the names I want to play. You should be adjusting these constantly. If you want to go short, you should have that same list. Does this make sense to you guys? You should keep this, and you should keep updating it and keep it in front of you. And as you're seeing stuff, or you pick up something, write a note and then go up and research it. Yep, there's always there's always a bull market somewhere. The truth is, there's always a company or something that's going on. There are 2 events that could quickly change the tides of this market, right? Not even earnings related. The midterm election, right? We don't know what the outcome's going to be there. But if the Republicans held the House and the Senate, the market would probably roar. I don't believe that's going to be the case, but probably would. Or China talks get rekindled or start to make something there. Okay? Uh, by the way, the brokers make a ton of money in markets like this because of all the algos and stuff going on, right? They're getting paid out the wazoo. They should all be strong next quarter. All right. So did that help, guys? I just spent a lot of time there talking to you about this stuff, and I was hoping that this would maybe give you a better idea. The bottom line is I want to say to you guys, if you're not comfortable trading a market like this, stand aside. But pay attention for when your conditions come back to you. You don't have to trade every day. Don't keep doing what you're doing if it's not working. It's just going to drain your account and damage your psyche. And that's the worst thing you can do to yourself. And that's the best thing. What would I do at Micron? I own 10 contracts in Micron that are worthless. I would shoot it and leave it for dead. Micron at this point, we got to wait. All of this has to wait. We'll see. All right, we got about 20 minutes. Let's jump into it. Let's see if I have any questions I didn't answer. Is there anything I didn't answer for you guys through this before I move on to sentiment here? Oh, Chris, I look at a ton of stuff. I look at average decline to put the calls. I look at a ton of stuff all day long. McClellan, I obviously. Here, you're asking me to use the McClellan? I look at it every night, and I have it here, the intraday here on my SPY. Here, right there. See it? Well, I'm going to record this, so watch it again, Mark. Let it sink in a little bit. So I'm always paying attention to this stuff. I tend to trade common on the VXX. You can definitely trade calls on it as well. I tend to trade common. Lou, I don't play earnings. I'm not trying to be difficult. I don't touch earnings. I don't play it. I play afterwards. Occasionally, I'll buy some shares after hours to scalp it, but really, I'll play it the next day. Common means stock, PW, exactly. VXX, look at the volume on this thing 100 million shares, very liquid, very easy to get in and out of. I like that. Does that make sense? And the spreads on it are a couple cents wide, where the options could be 15 cents wide at times or 20 cents wide. Uh, Boss, you're asking. I have a service that I call Flow Real Time. Um, you can use a lot of people use like me Trade Alert, right? Trade Alert's a great product. It's not cheap, and you really have to understand how to use it and interpret this stuff. My advice to you would be to find somebody that understands this and pay their service, because learning this stuff on your own takes a lot, and it takes a lot of experience on how to read this stuff. It's not as easy as it sounds. But that would be my advice. But if you want to do it, you can do Trade Alert. TOS has scanners in it. I don't find their option scanners to be all that great. Bottom line. Kerry, I trade options on TD Ameritrade. I have a much better deal than that. All right, back to here. Let's get going a little bit. We're running low on time. I'll come back to this in a minute. All right, sentiment. It's ugly, right? So first things first, guys. Last week, one of the biggest earning weeks of the year. This is the other biggest. These next last week and this week coming up are the two big earnings week of this year. So you look at this and you say we got a lot of names. So you got Mondelez. By the way, somebody was asking me about Mondelez calls. Now we know why they were buying calls on it. They have earnings this week on Monday. Earnings bet. That's probably why I ignored it. Now I know why. I remember now why I ignored it. They had earnings coming up. All right. So look at the lists on here, some of the names on here, right? Monday to me, not too exciting. But then Tuesday, GE, that'll be interesting. Under Armour, BP, Coke, Pfizer, Sony, Baker Hughes, GE, right? Then at night, we got the big ones: Facebook, eBay, Electronic Arts, which has been absolutely beaten and battered, right? FireEye with buyout rumors swirling that Facebook is looking at them. All right. What else out there? GM, I don't expect much from, but then you got Estee Lauder, which has been interesting. That's usually a recession type proof name, right? AIG, and then obviously Thursday's the big day. We have Apple, we have Starbucks. Tiva is something that's on my radar to see how that does. So you have some big earnings there. U.S. Steel, right? So we have a big earnings week ahead, and then a bunch of energy names on Friday morning, really kicking it up. Yeah, Baba's in there as well. I forget where Baba is, but I know it's there somewhere. I just didn't see it for some reason. Another big name, right? That one's been beaten up. If you're in my service and you're trying to understand it, well, what you're going to do is you're going to get a nonstop stream of what's going on out there. So, here's my service. So if you're in it, what this is all the flow as it's coming in, and so I'm just putting it out there so you guys see it. So, SPY 260 puts, how much they paid, how much it was for, where it was at. So you're seeing all the flow that's coming in that I think is noteworthy. So put this all. I do not have Discord. So if you're in there, you're seeing all this stuff, right? And then you get my videos every day, and interaction plus news and whatever I think is relevant throughout the day. I'm putting information up there for you guys, right? Trump comments on China not ready for a deal, right? When I see news like that, I'll post this out there so you know what's going on. I'm not in the 10K challenge. I don't know what that is there. All right. Fear and greed, not the best indicator in the world, but always worth looking at it. We are in extreme fear. Now, I will tell you, I have seen this hang out down here at near zero for a long time. So, but it's telling us sentiment has gone completely the other way, right? A month ago, we were 53. We're now here at 7. SPY, stock twit sentiment. We were all the way up here in the 60s. We're now down to 45%. The Qs were up 70 plus. We're now down to 56. And look at the IWM. Look at how low it is. So sentiment is really bottoming out down here. Really, really, really low. Go from there. Give me a minute on boss. New York MIMOT. This is one of the oscillators. Chris, you were asking about this. Every night I look at this. Every night I post this to people, my subscribers. Notice the change here in action in this. What's changed? The change here is we're now staying below neutral for extended period for most of the last couple of months, right? We've been barely bouncing to positive. Also, every time we start to get a good signal, they bounce the market just enough so that we get, it just doesn't go extremely oversold. So it's been this constant change. We're struggling to keep and hold these good oversold signals, which usually lead to a massive bounce like here. We're not getting it this time because we're getting this very slow, methodical step down. All right, the NAMOT, same thing. This one's for the NASDAQ. All right, NASDAQ, negative 143, negative 200. We hit this 2 days ago, and they bounced it right off of there with that one little bounce there ahead of Amazon and Google earnings, right? So now here we are, pushing our way back up. We'll see what it does. Struggling to hold a good oversold reading. All right. So here we are, guys, and we don't have a ton of time, but let's go through some of this. The SPY here at this point, right? We've talked about this with you guys. Your break here should have been, I'm getting out of Dodge, and then we broke down, right? And you can see we broke through different levels. This 280 area was big. We couldn't hold it. This entire time, we've basically been below the 8-day moving average, right? Can't get above it. First sign, no momentum. Momentum is to the what? If you're above the 8-day, I say you have momentum to the upside. If you're below it, momentum's to what? To the downside, right? So we have nothing but momentum to the downside here at this point. We are below the 200-day. We lost 270, which was a major point of control for this market all year, right? This candle, by the way, from yesterday is not right. We did not bounce that hard. It's a bad print. Right? And yesterday we put in a low of 262, closed up. So maybe we have a reversal candle here we can start looking at. Possibly. Not a pretty one, not a good one. We closed way off the highs. I actually don't. Did we even get to 262? I think we did. The next area of support for me is 261. Does that make sense? I'm picking up these areas over here. Do you guys see this here? Okay? If we're going to go lower, that would be my next area to look for buying if we keep going. Then you start coming down, you start looking at the lows of the previous lows here. And then if we lose this 253 area, guys, we're in big trouble. That would mean we couldn't even hold the February lows, right? So for me, changing character on this market, we have to get above the 8-day and then retake the 200-day, or at least get to it. Now, that could be a nice squeeze. Oh, the NIMOT and the NAMOT, they're oscillators. They're measuring overbought, oversold conditions in the marketplace. The NAMOT is for the NASDAQ. The NIMOT is for the New York Stock Exchange. So what they're basically saying is that so many companies are closing on lows or closing low are negative that the oscillator is saying we're getting close to a bounce. All right, so there's SPY, the VIX, right? The VIX here, we've been tracking this all year long, right? Telling you how this area down here was always reversal areas. We had a descending channel here, right, into it. And what happened here? We broke above it, and this time we didn't, that was it. We broke above it, and we've been off to the races ever since. So if you were trading and watching the VIX, there was a character change here too, right? Just before we broke down, it was showing a change in character. QQQs, weakness. We failed, right? Came in, failed when we retested 200-day 2 days ago, and now we're putting a new range low in here. All the markets are in 10% correction now. We are in a correction, so we've all caught up. What I would also point out, RSI is not oversold here on this anymore. These little bounces have been enough to keep RSI from getting oversold on the markets, right? So they're making room to go lower, right? Next area support, 162. The Russell. One of you guys brought up that the Russell was the weak link. And you're making a great point, right? The Russell led us higher this year multiple times, and it was the first one that broke, right? This was leading us down. And look at how far down. We lost a 200-day. Look how far down we've come. We've come all the way back here. We're almost already testing here the February lows. We're not far off of it on this. RSI is oversold at this point. So, we're looking for some bounce here. Yesterday's candles, I'm not really sure how real it is on the SPY, guys. And the reason I wanted to say that to you guys is there was a bad print on the open. And you see it's not here. I removed it. You see it's not here on the ES, right? I took it off of here. I adjusted the candle so it didn't screw things up, but you can still see it on the daily. There was a bad print. The high should be 268. It's showing the high of the day here at 271. So it's a bad print. All right, it's a bad print. Okay, so Russell leading us down. One thing yesterday gave me a glimmer of hope. Yep, they both were. One thing gave me a glimmer of hope yesterday. I'm going to go over my service in 1 minute with you guys. I'll give you that information. I don't want to sell you hard. I'll just tell you what it's about. Yesterday, we saw a big buyer come in on the open and came back late a couple times into the diamonds. What gives me hope is we've seen there's not a lot of buying that goes on every day in the diamonds. We saw big buying here. This guy, whoever this is, has been pretty right most times. He's not going for a long term, right? November 2nd, 247.50 calls. At the end of the day, 9,800 of them had been bought, 88% on the ask. That tells me that this guy is buying them to open. Does this make sense to you guys? This guy's playing for a bounce next week on the diamonds. Does that make sense? So this gave me a glimmer of hope that somebody's looking for at least a short-term bounce next week, especially on the diamonds. And what components make up the diamonds, right? Let's look at a couple of them real quick. Right? McDonald's. Look how nicely this held in after earnings. BA. Holding in well since earnings, right? Apple has earnings next week, right? But holding in looks good. Isn't Procter & Gamble on there too? Right? Cat had earnings, kind of hanging in. Looks like a bear flag to me, but we'll see. How about Disney? This one's been holding in better. Has earnings, I think it's next week. I don't think it's this week. It's next week. It's the week after. Yep. So just trying to give you some Microsoft, Walmart. Microsoft held in well, right? So this guy is thinking that they're going to reward the big cap names. You guys follow me? Home Depot hasn't been so good. Okay. All right. You guys are all asking about my service, so let me take a quick second to go over that with you. And I appreciate you asking. Oh, wrong one. My service is at smartoptiontrading.com, guys. I'll put you the link in here for all of you. What I do every day is, there you go. I come in, I do teaching and mentoring, but primarily, and I do that all day long, by the way, for everybody in my service, I do real-time option flow. So what you'll get is every morning I do a morning setup video. It's about 10 minutes long. It's posted on my private Twitter feed. It goes over what I'm thinking for the day and some names I like, long or short, and what I'm looking at to play based upon that. I do a nightly video recap. Again, right as the market closes, it's out there so you can watch it. And basically it goes over what I thought of the day's action, what I did, and what I like moving forward, and what I think is swingable, if there is anything that's swingable from the option flow there. I am live in a room for about 3 to 3.5 hours a day, 9 to 9:30, usually 10:30 to 12:30, and then usually 3:30 into the close. And you know interact with that. And I do a weekly mentoring webinar every Thursdays where we do nothing but teaching. My private Twitter feed, you already saw some of it. You get all the news, trades, and option flow as I'm going over it. I charge $25 for the first 30 days. You come in through PayPal, you click on this link, canceled anytime through PayPal, and then it renews at $100 a month thereafter automatically. Okay? I consider that $25 a cheap way to get to know me and what I do, and if you don't like it, it doesn't cost you more than a couple of drinks going out for the evening. Any questions about that? I gave you guys the link if it's something you're interested in, so you get a lot of information from that. Can you believe it's been an hour already? I do courses. Now, I am part of Andrew's room. I do moderate for him for 2 hours a day, Lou. But this gets you all the access to all my private Twitter feed and all the option flow and everything I do. Any more questions, guys? I can't believe that was an hour. That went quick today. I really hope this was helpful to you guys. Could I show the VXX trade on a chart? Yeah, I did already. I'll go over it again. For me, it was very, very simple. Again, we talked about the SPY failed at the third lower high, right? And what I did here is I grabbed 1,000 shares of the VXX. I got in at 15, at 40.15 here in this candle. This one right here, right? And I was in it until 40, what did I say, 47 cents or something like that. I basically made about $300 in about 5 or 6 minutes and I was gone. Now I could have, and I did think about selling half and keeping half, but I ultimately decided that I didn't want to risk it. And I put the money in my pocket and said, I'll see you guys later. And if I left half of it on and I stopped it, I would have made a lot more money, but I was okay with that. Oh, Stan Earnings Whisperer, just go to his Twitter feed, earningswhisper.com. I love them. Puts all sorts of straight up there. All right, guys, it's Saturday. I'm going to do my best to forget about the markets until tomorrow when I'll post some charts on my public Twitter feed. You want the link? Which link do you want? All right, I'll send it to you all again. Go there, go to smartoptiontrading.com. Now you guys are asking me, what did I do? I probably killed it. I did. Okay, go to smartoptiontrading.com, click on find out more, and then real-time info, and just subscribe. The fear index, guys, we want to see that again? I mean, that's the least of my favorite indicators, but sure. Come on. Can't get it to come up at the moment. Nope, PowerPoint won't work at the moment. All right. It was posted on TweetDeck. All my trades get posted there. I like to put the call along with the oscillator stand. I use those mostly. SPX. What do you want to see here? On a daily? Yeah, there you go. Yeah, similar. But didn't get as high, right? See, it didn't go as high. There was a bad print on the open. Carrie, whether you're new or experienced, this can work for you. If you're new, you'll trade smaller and you'll learn a ton. And if you're experienced, well, the best traders I have that trade with me are the guys that just know how to see what's going on with the flow and take their own trades. Yeah, when I'm live, my screen's live. To Feb 12 here. Like this day? Oh, you mean like this day here? You're saying it's a little bit like this one. I see. Yeah, maybe a little bit. Maybe a little bit. If there's more puts, it can than calls. It can indicate. It's really the type. It's not. It's not the quantity. It's how they come in for me, right? Part of what I do, guys, is I read the flow and understand whether something's being bought or sold. So, you know, I don't post everything. I only post stuff that I'm really sure about to you guys. So you guys are getting clean stuff. How do you trade cheap options without getting IV crushed? So if you want to trade cheap options, like you trade a name like Netflix, right? If you're looking for a big move, you got to trade a name that can move. So if you were going to play Netflix and you want to do something, you're looking for a big move next week, you think we're getting a bounce, this thing, again, you see this here? The average range of Netflix on a day right now is $18 a day. Do you guys see that? No, no, Lou. This is my own. No, 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 no. This is nothing like that. Trust me, nothing like that. So if you can get a 20-buck move on Netflix in a day, you can say, I'm going to play the 320s at $3, 310, because this thing will move enough to make up for it as it comes in. If you think you're buying a low, or you can go in a little bit, but you got to be careful with Netflix because this thing can turn on a dime too. All right, guys, I'm over time here. I wish I could sit here and answer questions all days, but I do have to get running here. My tweets are what's happening. I cannot recommend you guys to make buys or sells just like anybody else out there can, but you will see what I'm taking, or I will say whether I like something or what I think about the flow specifically. So, for example, there was a big call buying in RCL the last 2 days, but the stock, I think that was good flow, but the stock's not reacting to it. So, it's not something I'm saying we should go chasing after. Does that make sense? Right? 2 days of big call buying, the stock's still selling off does not tell me that's a good bet right now. Right? So you have to look at the action as well. What that says to me is whoever was doing that may have been selling their stock and replacing with options just to stay in the game. Cheaper, less risk. All right. Guys, thanks again for joining me on this Saturday. It's been a great day. I do have a mentoring session coming up shortly, so I do need to run and get prepared for that. I will catch you guys all next week. I'll post some charts tomorrow. Have a great evening. Great weekend.